Hello everyone and welcome back to Finance Lingo. In this video I'll be talking on the stock, the Nasdaq stock, especially it's a China technology stock listed on Nasdaq, and I see that this stock have great potentials and I personally is invested and I'm looking to add more position in this stock likewise. Nonetheless, before adding more position, I like to do a more thorough analysis on this stock because I do not want to lose my capital, and this stock I'm very likely to double up my capital because I see great potentials. So let's get started. So this video is provided for you for general information only and does not constitute a recommendation and offer a solicitation to subscribe for or purchase or sell the investment products mentioned herein. So I'm just sharing with you the information and my views on these stocks. So here goes. In this talk, basically, I'm talking about this company known as YY Incorporations. It's a China social media live videos kind of platform. All right. So basically, this company's YY Incorporations is listed in Nasdaq. All right. It's a China company. It's a technology company as well. That's why it's listed in Nasdaq. All right. So here we have what we can see here is that this stock is owned by several banks and investment firms. Here we can see BlackRock, okay, Deutsche Bank, Morgan Stanley, Vanguard Group, JP Morgan and Chase, Bank of America. So these are the few familiar companies you guys probably will be familiar with. All right, so what we can see here is that I think there are some banks or financials adding new position in these companies, and so far the institution ownerships is about 4.05 positions, and more peoples are adding more into these positions as well. So what is this company, what are the websites that belong to these companies? So these are it's basically a Chinese companies, so this is how one of their websites looks like. And personally I'm not very good in Chinese, but I do understand what they are trying to say, but you take me some time. So this is more like a gaming platform. Then this is an educational platform, han100.com, more for education purpose. It's an online education thingy. Next is the online video streaming things. Right, you can see some of the online streamings. So this is online streamings videos you guys can see online, and on as well as some gaming competitions going on. Okay, this is another. Okay, let me just close this. So another 知牛8.com is more like a finance uh, platform as well. So all these are belonging to YY. So what I can show it to you here is that YY is trading as a ADR, American Deposit. Right, so this is the one, YY Incorporation, listed on Nasdaq. The last trading price was 105 US dollars. So let me show you the stock analytics of this company. Oh, just hold on a moment. Because the box actually went sideways. So hold on a moment, let me show it to you. Okay, so this is the stock analytics about YY. So they already summarized for you a pretty good summary. This company does not distribute dividend at the moment. I think they want to capture the markets because right now the growth is exponential. So as well you can see, this is the earning growth of this company, and the past few years it have been growing very rapidly, and the earnings actually rise very tremendously. Same likewise, the cash holdings in the company is very strong, and equity values is skyrocketing. Okay, but nonetheless, because these are high growth companies, they are not looking at distributing any dividends, as what I can see. All right, so this is the share price graph. All right, so but because of Donald Trump recent trade war issues with China, so there's some downsides here, but nonetheless, over the long run, I do see further upsides because as what you can see on their websites, as well you guys can read over here, it owns the following domains. From Huawei.com, 多万.com, 100.com, Huya.com, edu, 224ol.com, 知牛8.com. So all this belongs to them, and their subscription rate is very high. And one thing for sure is that what we guys probably read through like YouTube, Facebook, unfortunately all these things is not accessible through for the Chinese in China. So what you can see is that they can only access all these sites to view some of this live streaming thingy. So the good thing is that the China is a very big market, and the bad thing is that they are not um, ready for the English at the moment. So nonetheless, the China market alone is pretty big, so I do see a huge potential because of their surge in revenue year after year. All right, so personally, I do have about 60 shares ownership in this. I'm looking to double up. So what I did was I did an Excel sheet on this company. Let me show it to you. I'm just going to enlarge it for you guys. Okay, so this on the left column is the what I extracted from the Thomson Reuters, or from the Boehm stock analytics. This on the left column. So same thing, these are the revenue as what you seen earlier, and this is the equity value and net income. So I need to emphasize again, one ADR is equal to 20 shares. So when you guys see the stock analytics, okay, you might notice that these common shares does not tally, because basically the number of ADR, you need to divide this one by 20 to tally with the ADRs that's available in the market. So nonetheless, I've worked that out. So when you come to one ADR, the earnings is actually 6.9 USD dollars, and not what you've seen here, because this is expressed in Chinese here, and this is per common share. One ADR, you need to multiply this by 20. So okay, so I did that and summarized that. So what I'm going to show it to you here. Okay, so from these past 5 years of revenue earnings, what I can derive here was the differences between their revenue growth. So wherever you can see, there is some declining revenue growth, but nonetheless, this kind of double digits and is 30 or 40 revenue growth is very rapid revenue growth. And so what I did was I worked out the mean, median, and the max and the average. So and similarly for the gross profit margins, I worked them out as well, and the net profit margins. So because in the long run, it's going to return to the mean. It's very likely that's the case for all kind of companies. So what we see here is that the the minimum earnings was minimum growth was 39%, whereas the average was about 60%. So mean, MEAN, is also the average. So same things, the average for the net profit margins is about 22%. So what I did was, okay, so this was last trading at 105. So just let me correct all these numbers. So based on the I took the worst case scenario that the revenues growth wasn't as fast. So I take the mean at the minimum at 39% for the 2018 growth forecast, and a decreasing trend reported. I do not know what is likely is going to happen, but I just did assuming the worst case of scenario to happen on the revenue growth. So what we can see here is that this is going to be the revenue that is likely to be reported in the following next 5 years. And from there, the revenue, I derive the mean, median, and max average net profit of this company. Okay, so from here, I did actually work out that 63.2 million of ADR shares out in the market, and thereafter the earnings per share. Okay, based on all these net profits, for the earnings per share, I work out assuming let me just correct this. Okay, so assumption of the 15 PE ratios, because right now the company is trading about 16 PE ratio. So assuming the assumption that's 15 PE ratios, when it go even lower, in the 2 years forward, is you are looking at the share price trading around this range. So okay, and if 5 years forward, the share price is likely to trade around this range. Okay, assuming this kind of revenue trend going forward. So this is assuming 15 PE ratios. The time when I bought the share was about 18 PE, so I'm running on some paper loss right now, but nonetheless I'm looking to hold the share for a pretty long time. So what you can see here is that the PE ratios 5 years forwards is going to the share price 18 times in the 5 years later is going to trade around this price. So do take note that this is an assumption, assuming that the company remain robust. Okay, I did another 25 P ratio, but I do not think that there's any likelihood, so I'm just going to skip this. So nonetheless, I'm optimistic that the share price is likely to trade between 360 or 380 5 years forward. Okay, so this is what I see. So I do see great potentials. So I do have a questions. People have asked me if this company is better than Facebook, the growth is better than Facebook. Nonetheless, I think that Facebook is trading about 40 PE ratio at the moment. This company right now is only trading at 16 PE ratios. But nonetheless, Facebook have a net profit margin much higher than YY incorporations. YY is only trading at about average of a net profit margin about 22%, whereas Facebook is about 40% PE ratios, which explain the reason why they are trading at such a high PE. But nonetheless, I do want some safety here. Because of this low PE, I'm more comfortable here, and I still get to enjoy the growth. So that's why I like them. So okay, so this is what I present for you, and I just do a crazy forecast, which unlikely to happen, but that's just gonna see what's going to happen 10 years down the road. So I did a 10 years forecast, assuming the rate of growth with a declining rate of growth. So as what you can see, 10 years down the road, 2027, what is the, assuming the company remains continue to grow, which I do not know what happens because 10 years is a long time, but let's just do a crazy forecast. And what I did here was that, well, if this thing does report the same trend like Facebook or Google, because okay, we are going to experience the share price reaching the range of 1,000 cents year later. Why I decided to do that? Because let me show it to you what happens in the Facebook as well. So let me just show you Facebook. So you guys can see here that the Facebook earnings actually within this range, okay, over the years it had literally almost doubled every 2 years, and over here it literally doubles every 2 years. So this is Facebook, the earnings, the revenue and the earnings literally growth, and as a result the share price really skyrockets. So let me just show it to you on what happened to the share price over the past 5 years of Facebook. So what we can see here is that the past 5 years of the Facebook, just the 5 years durations between the 2003 to 2008, the share price have rose from $30 to $150, which is 5-time increase. So at a net profit margin of 40%. Alright, so similarly, a 5-time, I don't expect a 5 times earnings. So a 5 years forward, I think that a 3 times increase is pretty attractive enough. So because this is also social media thinking, 3-time PE is, I'm very happy with it. Okay, the reason being, as what I mentioned earlier, Facebook is trading at a much higher PE. So let me just emphasize, show this to you guys. So this Facebook, is this Facebook? Yeah, Facebook right now is trading at 25-time PE. So I'm really not certain how much that they can grow. One thing I like about Facebook is that they are open to international markets, any countries, many countries, which exceptionally China is not. You cannot do Facebook. China is use Weibo. So here we are. This is Facebook, and I can show you similarly on the alphabets. Alphabets is Google, and they are experiencing equally growth, but I think Facebook is growing faster than Google. So nonetheless, what you can see here is this is alphabets. So they do report equally high growth as well, but do think that all these technology companies, because of the market competition right now, all these companies do not like to give dividend at the moment, particularly in Nasdaq or US, because the tax on dividends is very high. So a lot of companies would rather keep the money in the company. So here this is alphabets. So when you compare this to YY, just let me show it to you, YY incorporations, the net profit margin isn't as good as the Facebook. Alright, but nonetheless it does reported similar growth from this 2 billion Chinese yuan to 6 billion Chinese yuan, and similarly 2 years down they're going to report similar earnings. So this that's what you can see is a lot of exponential growth. And what I did was just safety forecast, and it really presented such good PE ratios and good share price targets. So I'm very optimistic on YY incorporations and hope that this will be the multi-bagger for me over the next few years. Okay, so this is my view and opinion on YY incorporations. I'm looking to add more positions into this stock, so I'm going to end these videos. So if you guys have any question with this stock, you can drop me an email, okay, or call me at my dash numbers. So if you guys want to invest in these stocks, do not have any trading account, do drop me an email, and we can arrange a meetup, and I'll help you with opening of this trading account to invest in US stocks while you are stationed in Singapore. So hope you guys enjoy my videos, and that is all for this video. That's all. See you guys again. Goodbye.